Hello, everybody. This is Joshua Hayes at BigWaveTrading.com for your November 17th report for the November 18th stock market session. Today was another down day for the stock market. Not much is new, as you can see from September. It's been almost all down days, especially in October. The good news is today that the Dow Jones Industrial Average held its lows from Thursday, and as we can see in the S&P 500, we held the lows from Thursday, and in the NASDAQ, we held the lows from Thursday. And as you can see on today's volume over here, you can see that volume was lower today on the NASDAQ, volume was lower today on the S&P 500, and volume was lower today on the Dow Jones Industrial Average. So now what I want to present to you here is that what we are looking for tomorrow is a follow-through day. Now, I will admit, I don't believe if we even do have a follow-through day that it will be any good. We will either have to wait for another follow-through day in the future or probably work on more bases, because I do not have enough nice-looking charts or enough stocks even breaking out beforehand that I usually do before a great rally. Before the 1999 rally got started, before the 2003 rally got started, and the 2002 bottom even, stocks were moving. Sina, Sohu, NetEase were already moving in 2002 before the bottom. And before March 2003, stocks like Garmin, Stratasys, USNA, and others were already moving before the actual follow-through day. So that's what we're going to be looking for. And the only positive for bulls is that after the very strong volume on Thursday, we had lower volume on Friday and lower volume again today on Monday, and we're holding the low. So if we get a higher volume day tomorrow on heavier volume, it will be a good sign short term for the market. Bulls can then look to go long stocks if you buy bottoms, which is just crazy because you've been killed all year long. That might work, but I'm going to wait for breakouts to work out and then get long something like that. But I'm going to take a peek at the S&P 500 again and show you how well it's holding up relative to the Thursday lows, as you can see over here, the lower volume. Let's take a look at the NASDAQ 100, same thing, holding above the lows on lower volume. And then there's the NASDAQ. And even though we can't see the S&P 600's volume, we know it's lower each day after Thursday's rally. And let's see if the Russell 2000 is holding the lows, and it is. Let's see if the New York Stock Exchange is holding the lows, and it is. So we are set up in a position to possibly rally. However, the rally will not be good because I don't have any stocks showing up in my scans that alert me to possible breakouts beforehand, and my 10,000 average daily volume scan and my 100,000 volume average volume scan has so little stocks in it right now compared to any time before that I just don't see how now could be the time to rally. I haven't seen the amount of new highs today because IBD has probably just now come out, but I'm sure it's still around the 2, 3, 1 area. And I have to tell you, 1, 2, or 3 new 52-week highs is not going to cut it for this market. Let's look at the United States dollar, and as you can see, ever since resolving this flag pattern to the upside, it has had a rally, and it continues to move higher with almost a 1% gain. And since the time it's over the 50 and 200-day moving average, the index is up 16.45%, which is just great. So the dollar is still strong. I still hear scary stories about the dollar, how if China dumps our currency, it's going to go to zero, which is very scary to think of. But for right now, it's good. And right now is when we're trying to make money. So if you're long the dollar, stay long the dollar. Until it closes below the 50-day moving average, there is nothing to panic about. If you went long with the move over the 50 200-day moving average in August, if you went long even here off the 50-day moving average bounce and you have a gain of 9%, still using the 50-day moving average is prudent, but I might look to take some profits right about now. Let's go to look at the volatility index, the VIX. As you can see, it jumped up to 69.15, still nowhere near the old highs of 89.53, but still nice and high enough that if we ever do turn around and rally, it'll be good. Now, I'm going to go ahead and show you stocks that look to me like they've bottomed. Look at this stock. Look at the BOP volume and price surge. Top window, middle window, lower window. Do you see how the BOP volume and price pattern all explode? Now, If this was, follow my arrow, a cup with handle pattern that worked its way up back to the new high, then built a handle, and then broke out on heavy volume, that would look like this surge right here, boom, 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 I would definitely be going long that stock. But this is just a bounce off a bottom, so it still has to build an entire base for me. And I want to show you the fundamentals of it right now. Look at this, 200, 150, 157, 240, 999% gain, 396 all the way to 402% gain. Sales have gone from 3.5 million to 40.3 million in 8 quarters. So you can see it's growing. Let's look at other stocks that look like they've possibly bottomed. Look at HTX. Look at all of this green bop and now max green bop, and look at how the volume grows. And look at the positive price pattern. Now I just need the 50 to get above the 200-day moving average and the base to set up. And let's look at this stock, World Fuel Services. Look at how it's had green bop here, green bop, and it's increasing towards higher bop. Notice on this rally, volume keeps getting higher and higher and higher. This could possibly be a bottom. Nothing says that it is, but it's possible. And the fact that there's stocks that look like that out there could possibly mean that we're getting closer and closer to a bottom. But I got to remind everyone, the right side has been the short side. Since the top in October, the market is down 47.89%, so basically it's down 48%. There you go. It's down 48.3% since 10/12/07. So in 1 year and 1 month, if you've been long the market, general market, you are now down 48%. I want to remind you, Cramer's down over 40%, yet he's all over TV. In my worst account, I'm down 7.4%. And that's because the account was given to me on November of 2008. So I was given the account here, and the market's down 45%, I'm down 7%. However, in my account, I'm still only up around 32% this year, and I gotta admit, if I would have gone fully margin the shorts that I went short, I would be up as much as Wu-Tan, Author Ego, Axeman, MJ Jacobs. All of these guys in my chat room are up between 60 to 80%, which is doing much better than me, and that's because they had more conviction in the short side, not necessarily my short calls, than I did in my own calls. And that to me shows excellent, excellent investors. But anyway, I'm going to go ahead and wrap it up there. Tomorrow's the key day. It's supposed to be day 4 of, or is it day 3? I don't even know. First day is the day 1 rally attempt. Day 2 was Friday. Day 3 was today. So day 4 is tomorrow. So if we see a higher volume rally there, it'll be nice, and we can start to try to look for longs. However, if I still don't have any full covers, which I didn't tonight, I have to admit, the new short that I went short, we've got to partially cover it. It went the wrong way today, and that's on a down day. It's just wrong. And then also, we have a short now up 85%, and it went down today on a big volume surge and is an extremely extended from its 200-day moving average. We've got to take at least 25 to 35% gain. I'm going to take 33% off with an 85% gain. I still think this stock can lose 90%. And just remember, folks, this 85% gain, for those of you that are not a subscriber, comes from, I believe, the month of May. So in 1, 2, 3, 4, 5, 6 months, we have an 85% gain in short. And that goes along with our 73% gain, 72% gain, 65% gain, and others. And we're also long a stock that's up 51% and long another stock up 32%. So things are not horrible for us. I have just been too cautious. However, by being too cautious, the worst account's only down 7%, while the market's down 48%, while Cramer's down 42%. So I have one question. Why are you listening to these guys on CNBC? It's time to get into the charts. I have submitted a new submission for knighthood on Telechart for Don Wharton. Hopefully he publishes it within the next week. I did make reference to users that are up a lot, so I'm not sure if he will publish it, but it will basically tell you, be long the stock market only when the index is above the 5200-day moving average moving up. When the price of the index is below the 5200-day moving average and the 200-day moving average is trending down, you do not want to be long stock. So you only want to be in cash or short. I'm going to go ahead and wrap it up there. This is Joshua Hayes at BigWaveTrading.com. I wish you all continued great success. Let's beat this market. Aloha.